Hello and welcome to this presentation with Tethys Oil. Presenting today will be CFO Petter Hjertsted. My name is Carl Fredrik Schjøtt-Pedersen. I'm the equity research analyst with ABG covering Tethys Oil. I will be the moderator. So after Petter has taken us through a 20-minute presentation, I will moderate a Q&A session. So with that, Petter, over to you.
Thank you, Carl Fredrik. Good afternoon, everyone. Thank you for listening in. I am the CFO of Tethys Oil, a Swedish listed but Oman-based or Oman-focused E&P company, oil and gas exploration and production company. So please go ahead to the next slide. We like to, this is how we like to see ourselves, and I think this is summarizes pretty much what this company is about. We are a fully financed, dividend-paying, Oman-focused exploration and production company. We have had production for several years and continuously exploring, and I think in the coming years we will be exploring even more than we have in the past few years. So it's going to be a very interesting next few years, given where we are. Next slide, please. You can see some of the key data of the company. We are, as I said, listed in Stockholm. We have a market cap of about $260 million. We have 2P reserves of almost 27 million barrels, and they have been steadily increasing the past few years, as you can see. And production has been stable in the past few years. And in terms of financial performance and the EBITDA, solid profitability, but strong correlation to the oil price, as you can see from the graphs. Next slide, please. 2020 was a very challenging year for our industry. It was the pandemic, a record oil price crash, and for a company like ourselves in our part of the world, we were also subject to the OPEC Plus production limitations that kicked in May of last year. So it was quite a turbulent year with a lot happening, especially in the first half. Looking at these numbers, you can see some traces of that. Although I have to say, at the end of the year, looking back, we are quite pleased with the financial performance that we've had, given those quite challenging circumstances. So while we took a significant hit on revenues for the full year, down more than 30% versus the year before, we remained profitable on operating result. We had free cash flow, and we managed even to improve our OPEX per barrel. So we're very pleased with how we performed in the year, given those quite challenging circumstances. Next slide, please. So production is from our main producing asset, or from our main asset, blocks 3 and 4 onshore in Oman. As you can see, we've had quite stable production in the past few years, with last year seeing the biggest deviation that we had for many years, and that came in Q2 2020 as a result of the Sultanate of Oman signing up to the OPEC Plus limitation agreement. And as they entered into that agreement, all producers in the country were expected to contribute to the reduction in production. Shortly before then, we had in fact had record production, so that it was a significant drop for us. Towards the end of the year, we were allowed to produce somewhat higher than the quotas we were permitted, and that remains the case at present. However, we are still formally under those production limitations. Next slide, please. I think while production has been quite stable in the past few years, our reserves and resources have been growing. We have 9 consecutive years of positive reserve replacement ratio. In fact, adding more reserves than we have produced in the year, and in some years we have quite significantly so added. And at the end of 2020, we had our highest reserves ever, almost 27 million barrels, while at the same time having almost 14 million barrels in contingent resources, all from our producing asset, blocks 3 and 4. Next slide, please. Well, we've had that stable production and growing reserve and resource base. We have also been committed to distributing cash to our shareholders, and we have done so since 2015. I believe we were one of the first junior oil companies in the European space, at least, to provide a regular dividend. And this year, the board of directors has proposed a 2 krona per share ordinary dividend in addition to a 2 krona per share extraordinary distribution. Since the start of our since 2015, when we started distributing, we have distributed more than 100 million to our shareholders, and we have repurchased shares for almost $20 million. So next slide, please. And the key to that distribution is, of course, our balance sheet. It's a very solid balance sheet. We have no financial debt and ended the year with 55 million in cash. Next slide, please. So, our operations. We are fully focused for the moment at Oman on the Arabian Peninsula, outside the Strait of Hormuz. It's a relatively small country population-wise, but a large area of which the majority is desert and uninhabited. Production pre-limitations was around 1 million barrels per day, and the country, while it's firmly in an oil region, is not a member of OPEC, but has been a very active member of OPEC Plus in those cases where those agreements have been made. It's worth noting that any export that is made from Oman of oil is done by shipping over the sea, and it's outside the Straits of Hormuz, and therefore not impacted by a lot of the turbulence that has occurred in that region in the past years. So next slide, please. Our operations in the country. We have our main core assets are blocks 3 and 4. That's 2 blocks, but 1 license. Quite a significant piece of acreage. We have held a non-operated interest in that since 2007. We have a 30% of the license, and it has been in production since 2010. It has produced solid cash flows in past years, while also being the source of significant exploration in parallel to that production and development. We have built up a strong local presence with a large proportion of local staff with technical expertise linked to the Omani geology. And to capitalize on that experience, we have picked up a portfolio of exploration licenses in recent years, and that's Block 49, Block 58, and Block 56, of which all are currently operated by us. And this means that we are actually one of the biggest acreage holders in Oman, with our licenses in total covering roughly 18% of the country's area. Next slide, please. There has been a significant amount of activity around those licenses in the past few years. So we picked up Block 49 in the license round of 2017 and held 100% until the end of last year, when we agreed to farm down 50% to the US onshore company EOG Resources, and that deal should be closing imminently. When it comes to Block 56, we farmed in for the first stake in 2019 and made a subsequent agreement at the end of last year to increase our stake to 65% to become the operator of that block. And Block 58 is a license we picked up in the most recent license round, where we have 100% and are operators. So next slide, please. Blocks 3 and 4, the mainstay of our production and cash flows in the country, sees significant activity with both development drilling and exploration drilling. But as the oil price came down and production limitations were imposed last year, activity was cut back significantly, and we went from 3 full-time rigs operating on the block to 1, putting 2 on standby, and reducing a lot of the development and the exploration activity. We only drilled 1 exploration well, which was the Anan-1 well, which was completed late last year, with very positive results. For 2021, we expect to pick up activity, bringing back the rigs successively during the year to increase drilling operations, both for production and exploration. So next slide, please. Here's an overview of blocks 3 and 4. These are quite significant licenses. It's almost 30,000 square kilometers. So it's a huge area of mostly rocky desert. You can see where a significant part of that is covered in 3D seismic. And we have a number of producing areas. It's the Shard field, the Farah South field, and also the Saiwan East and Air Farm. So a large number of different fields producing, and all going into the same infrastructure and being exported into the national pipeline infrastructure. And as you can see by the leads and prospects, there is significant exploration still to be done on the block, and there will be more seismic shot in coming years. So we believe there's plenty of running room for this block to keep growing in terms of reserves and resources, and potentially even production. Next slide, please. Block 49, farmed down to EOG, as I mentioned before. Once that's completed, we'll hold 50%, and then they also have an option to increase interest to 85% for any unconventional exploration, and that in particular would be fracking or tight oil related activities as defined on an operational definition. Next slide, please. Amin-1 well is the first exploration well we've drilled on the block. It was spudded on New Year's Eve of last year with a target depth of 4,000 meters and a primary target at 3,500 meters in Aktier sandstone, and a number of secondary targets and other areas of interest to be studied. This is the first exploration well to be drilled on the block for quite some years, and it is in general to be considered a frontier block with relatively limited drilling done on it in comparison to other parts of the country. However, we announced about a week back that we have encountered hydrocarbons in the primary target, and we are currently commencing a testing program and expect to give some more information on that in the coming weeks. And it's very encouraging, but we also need to see the test results before we can draw any conclusions from that. So next slide, please. You can see some of the pictures from the drilling operations. This is also out in the desert, and in fact on the edge of the Rub al-Khali empty quarter desert that continues into Saudi Arabia. And that is also the geological basin in which the primary target sits. Next slide, please. Block 56 started last year with some testing of some pre-drilled wells. When I say pre-drilled, it was drilled before we were in the block. One of which was successful in testing, producing 20-25 degree API oil. While we have yet to determine the commerciality, that's certainly very interesting and is something we will pursue going forward. Otherwise, the focus from our side was to increase our interest and looking to increase it to 65% and assume operatorship from the current operator, Medco Energy, the Indonesian energy conglomerate. This year, we expect to drill a few wells on that to follow up that Al Jalmud well, and hopefully be able to determine the commerciality of that, and also prepare some 3D seismic acquisition. We can go to the next slide. This is an interesting block in that it is significantly smaller than both Block 49 and 3 and 4, but does contain a wide variety of geological plays and petroleum systems. So 3 distinct areas with all quite different properties, and that we expect to explore in the coming years. And you can see the Jalmud well up in the top of the picture. That's where we had the flows in the production test last year, and that's what we will be following up with the drilling. Whereas we expect to shoot 3D seismic across the central part of the block, where a well was drilled by the previous operator, which did not result in a discovery, but provided some very promising data. Next slide, please. And on this picture, you can see the 2D seismic and 3D seismic coverage and some of the main leads, which we hope to firm up with increased 3D seismic coverage over the block. And that is something we expect to be doing towards the end of the year. So next slide, please. Block 58, our most recent addition, sits in the south of the country, south of our Block 49, and just west of Block 6, the main producing block in the country. And it has, in fact, contains a part of that was relinquished from Block 6 quite recently, and thus shares some of those geological properties. In this year, we expect to shoot some 3D seismic on the block and prepare for drilling of an exploration well. We are committed to at least 2 wells in the first exploration phase, which we believe should be able to give a good indication of the potential of the block. If you go to the next slide, you can see we have identified 2 leads on the existing seismic, very close to some existing discoveries just across the border in Block 6. And we will be looking to firm up those leads and to a drillable prospect, and hopefully be able to drill something in around next year, hopefully. Very promising, and geologically similar to what we see in Block 6, and quite different from what we see to the north in Block 49. So quite distinct in that perspective, which goes for all our exploration blocks, that they do have they tap into very different basins and petroleum systems, providing a quite diverse portfolio. So next slide, please. In 2021, we expect to invest a total of almost $15 million, the majority of which going to Block 3 and 4, and most of that would be drilling, which includes development drilling and hopefully a couple of exploration wells at least. We also will be investing in the infrastructure, including gas utilization, to reduce flaring and improve our carbon footprint. On Block 49, it's completing the drilling of the Thameen-1 well and the testing operations. And on Block 56, of course, it's those wells I mentioned before, and preparing for the seismic. And on Block 58, also preparing and conducting a 3D seismic survey. Next slide, please. So to summarize, we go into 2021, or we're in 2021 with the highest reserves ever. We continue to distribute significant cash to our shareholders. We have lots of activity going on across our blocks, lots of exploration activity, and hopefully can make a mark on our reserves and resources in coming years. And most recently, we've seen that the Thameen-1 well has encountered hydrocarbons, which is very encouraging. So expect some results on that in 2 weeks, and plenty of more information in the months to come on across the portfolio of assets. With that, I want to thank you.
Thank you, Petter. I just wanted to ask you a few questions following this presentation. First of all, if you look at the bigger picture, you have been able to grow your reserves pretty much throughout the life of the company, and it's been such a tremendous growth story. How come you're able to continuously grow them? What are the kind of restrictive factors, or how should we think about reserve growth going forwards?
I think the reason we've been able to increase our reserves over the years is the fact that we are continuously producing, developing, exploring, and appraising at the same time. Whereas the traditional model would be following an exploration, you would appraise everything and then start to develop. Well, we've kind of done that continuously, which is a lot more common, of course, onshore, but I think we've done it a bit more than most, and that means that there's a continual ability to step out and use the information gathered from the production, and quite easily, and using the infrastructure to easily tie in satellites and new discoveries. But it also means we've been able to utilize the cash flow and the staff on the block to be able to shift resources between development and exploration. I mean, we certainly believe that there's plenty of running room on the block. There's a lot more exploration to be done. There's a lot more to be tested. We are quite encouraged by the plans that are being laid for this year when it comes to exploration, in terms of perhaps taking a bit more risk than has been done in recent years, where there has been more focus on perhaps a slightly lower risk exploration, which has certainly added to reserves and resources, but not made a huge mark. We hope to be to reach a bit higher this year and see if we can take some bigger steps. That also does entail a bit more risk, so we'll see. But we're certainly very excited about it.
In terms of the Tamine-1 exploration well, when the results come in or are announced in the next couple of weeks, what should we look for? What is what would define it as a commercial discovery? And if it is a commercial discovery, what will then a potential development program look like?
Well, I guess there's any number of factors impacting that. I mean, absolutely, volume is a factor, but more fundamentally, it's a question of, does the oil flow? I mean, we in most wells in Oman encounter hydrocarbons, and in this part we have less experience of exploration, well, there's first of all the question: is it oil, or is it gas, or is it some combination of the two? That can certainly have an impact on how to develop it and what the development thresholds, commerciality thresholds are. So I would say there's any number of factors, including what kind of hydrocarbons, what kind of flow rates, and in combination with what the expected volumes are. Pre-drill, we were certainly looking for something that on a standalone basis would be commercial, while at the same time selecting a well that we thought would provide us with good information on the overall potential of the block. So it's at this point we're very happy with what we've found so far, and even if it does turn out to not be commercial, but we certainly hope so. And we're not that far from infrastructure. So while it's frontier in the respect of the limited amount of exploration being done in the area, it is fairly close to pipelines and good infrastructure. So we are quite optimistic on that.
Sounds good. And lastly, I guess with the oil prices at current levels, very healthy, nearly $70 per barrel, how should we think about the prioritization between holding a very very strong cash balance, increasing dividends, and potential for mid-year revisions in terms of increased spending?
Well, I certainly think the dividend proposal is what's been presented by the board. We have, of course, some other tools in the toolbox. There's the share buybacks if we want to trim the balance sheet. But there certainly is, given the year we had what we had last year. where a lot of spending was deferred, there is certainly potential to do some more investments that can reap some long-term benefits. So I think we'll certainly see some of that if the conditions persist. But there are any number of certainties. We are formally still under production limitations, and while we have been permitted to produce a bit more, there are no guarantees. So we will. First and foremost, we will be sure that we try to capture the value in our assets, and I think that's kind of a priority number one.
Okay, very clear. We are unfortunately running out of time, so I will have to say thank you so much for your presentation, Petter. Very insightful and a story that will follow close in the years to come, and especially in the weeks to come.
Yeah, stay tuned. Thank you very much.
Thank you.